Good morning. Well, we've listed down all the stocks that you need to track. So let's get in our market expert, Hemang Jani, who joins us on the show. Hi, Hemang. Good morning and good to see you. Well, it's the final day of actually a good fiscal. People will be feeling quite good. Maybe towards the end, you had a bit of a speed breaker. But otherwise, things looked quite good for the year on the whole. Let's discuss a couple of stocks. IDFC Bank, there's going to be a large trade. Warburg Pincus, there's going to be, a large trade that takes place. So the stock could open up a little bit lower. What's your view on this name?
Good morning, Nigel. Thanks for having me. IDFC First Bank, on a one-year basis, has done well, but Bank Nifty and some of these banks have actually underperformed. So when you have a block deal, which we keep now, seeing very often, typically the stock may tend to underperform, but I think it provides a great entry point. Because you will see a discount of about 3 to 4%. The stock has actually not gone anywhere. Fundamentally, stock looks quite decent. If you look at last 2-3 quarterly updates, they are pretty good. And the valuation is on their side at about 1.4, 1.5 price to book FY25. So I think for investors, I think it's a great entry point, but we'll have to give it some time for it to really move up.
What about a stock like AngelOne? It's a play on, the rising penetration of, the capital markets. The stock did well last year. Yesterday, it started trade lower, but managed to, claw back all those gains, 9% up on the back of that QIP fundraise. Where do you see AngelOne headed now?
I think it is one of the best performing names when it comes to the capital market theme, particularly given their market share on the derivative commodities currency side, and particularly options volume in the market, the way it has grown. I think AngelOne is the biggest beneficiary of that. Now it's pouring into wealth side and a couple of more areas. So I think it's a very interesting story. The stock has done so well in the last few years, but I think for somebody who really wants to participate, I think particularly from a capital market, turnover and that theme perspective, AngelOne is the best pick even at this price.
Okay, that's AngelOne in focus. Hemang, good to have you on the show. Just sort of trying to get some perspective on something like a Chalet Hotel. Chalet is, of course, looking at fundraising. The stock's had a good run. It's in a sector that's been doing extremely well. How do you view this one? And if not Chalet, anything else that you would buy in hospitality now?
Well, Chalet Hotel is not something that we track very closely. They are looking to raise about 1,200 crore QIP, which should be good in times like this where most of the hotels are trying to expand. But within the hotel space, I do think that given the way the traction is building up on the occupancy side, the way the tariffs are really shooting up, people do think that the earnings upcycle will continue for some more time. So I think Lemon Tree, Indian Hotels, these are the two names that we like space.
Okay, all right. Hemang, yesterday we had an exclusive coming out from Money Control. Well, they were stating that Bajaj Finance is looking at an IPO of its housing finance subsidiary. And they're looking at a valuation of around $9 to $10 billion. Your view on the stock and how does this change things?
We think that, this is a 100% subsidiary of Bajaj Finance, and what they're doing right now is to comply with the RBI requirements to do the IPO. And from the valuation that is being talked about, it looks quite huge. But our take is that Bajaj Housing Finance IPO itself is not a very big figure. I think what market likes about Bajaj Finance is the fact that in the recent quarterly update, post the RBI nudge, also the overall growth continues to be on track. And the company seems to be doing a catch-up for its underperformance in last more than 1 year. So we do think that this will be a short-term trigger, but as a stock, think that there is a case for some kind of a catch-up, maybe another 15-20% kind of an upside is very much possible.
Hemang, do stay on. We want to get our viewer for joining in. Hemang is still with us. Hemang, back to talking about individual stocks. Now, Bajaj Auto has been the best performing stock in this year, from January to March. It's given a return of 35%. They concluded their buyback about 2 weeks back. The buyback price was 10,000 and the stock is almost at 9,200. Do you see upside in Bajaj Auto after this kind of a rally, or would you play some of the other two-wheelers?
Bajaj Auto, which, as you rightly mentioned, is one of the best performing stocks, would be a market performer from here on because we've seen traction on the two-wheeler growth, even from current levels. And it has just started maybe 3 to 4 months back. That cycle may, stretch a little bit more. And I think the floating stock is less. And despite the run-up, company continues to be one of the best dividend yield plays. So for somebody who's looking to play, market performance, I think Bajaj will still provide a decent upside from current points also.
Okay, all right. Hemang, what about VIP? They had an analyst meet yesterday and there are some brokerage notes that have come out there. Now, we are at CNBC-TV18 on our show Inside Out. We spoke to Ms. Neetu, who's now at the helm of VIP Industries. And she was saying that we are going to get our market share back. We are going to outgrow the industry, which hasn't happened till now. And she also said that margins will be back to 14% in FY25 itself. What's your view? It's been the big underperformer. But to be fair, even Safari Industries has seen nearly a 25% correction from the recent peak. Your view on this space?
Well, that is right. It's ironic that in a tourism theme where most of the airlines or hotels have done so well, some of these luggage plays have actually been laggards, and particularly VIP, which is almost at like 1 year lowest levels. I think what market really wants to see is the actual performance. Yes, the management and the CEO is talking about recovery from first quarter. Wherein she is talking about a decent volume growth, market share gains, and margin expansion, but market wants to see the print. So once you see initial indications, of the numbers being reported, then that will give a lot more confidence. Yes, in terms of the brand that it commands, the market cap at which it's available, it looks quite cheap. But given the way Safari and other players have taken away the market share and companies missed out on such a big opportunity, I think there is some sort of a churn which is going on across the investors at this point of time.
Okay, got that. Thanks a lot for that, Hemang. Well, let's get